And it's been another busy week in the world of cryptocurrency. On Monday, when price was fairly low for all cryptocurrencies, Square came out and announced that they had received the 9th BIT license that has been granted by New York State. It's kind of a big deal because, again, only 9 firms, but how does this affect the market, and did it have any long-term effects that you see?
In the near term, it was very positively accretive to price, as it gives retail investors another way to get access to this. There aren't a lot of good ways to get access to this that are serviced by servicing every state. Some of the other things like Robinhood are still in a limited amount of states. So this obviously, just by granting more access, is very positively accretive in the near term. In the long term, it's just another large institution that's seeing this as an asset class or a market and wanting to participate in it. So it's one step closer to, as an entire economy, as an entire global economy, recognizing this as a market and as a space.
And it was also very positively accretive to price. I mean, we saw the price kind of bounce off the bottom, and it's stayed up there ever since. Although we did have a little scare last night. We saw, we actually started to see the kimchi premium from South Korea dip a little bit. And almost immediately after that, found out that South Korea's largest exchange, BITHUMB, had been hacked. Now, it wasn't a huge hack. BITHUMB does about $330 million a day in trading volume, and the hack was only $30 million. So again, this was nothing like the CoinRail hack, but we did see South Korea's market dip below all other world markets and actually fall pretty far below there. Now, they've already fixed the hack. They already took care of it. They're going to reimburse everyone. So the market has bounced right back. But seeing these hacks over and over and over and over again, do you think that this has long-term effects on the market? And you know, what are your thoughts on that?
On the surface, it's alarming, right? Because you see these institutions over and over have the same vulnerabilities. But when you dig down a little bit deeper, if you look at what happened at the exchange, so this time they were actually able to quarantine the wallet, and what that means is, because all of this is an immutable public ledger, right? So if something is stolen, it could be taken off the exchange, out of the storage or the wallet of the exchange, but then it's moved over to the hacker's wallet. And if anything ever moves, they know exactly where it's going to. So they can't convert it to cash or buy anything with it. So if everybody's instituting these security protocols, which their security protocols have been getting better and better, then it disincentivizes the hackers, because they went through all this, and if they ever move it, they basically get caught. So there's really no upside to them when everybody starts to quarantine, and it's part of their cybersecurity normal protocols. So, and that's something that CFTC regulation of spot would put in place. So we think that'll happen across the board. We'll start to see more and more disincentivization to attack these exchanges, and so you're going to see less and less frequent attacks.
In other news, Lloyd Blankfein, Goldman Sachs CEO, came out and said, when asked, you know, what do you think about Bitcoin? What's your thought on it? He said, it's not for me, but it's too arrogant to just dismiss it out of hand. Now, what's really silly about this is how involved Goldman Sachs already is in cryptocurrency. Why don't you tell us a little bit about that? I mean, you know more than I do about this.
Absolutely. So they're very involved in cryptocurrency, blockchain, and even Bitcoin itself. If you look at, they have the largest over-the-counter trading firm in the US called Circle. So it's off of Goldman's regulated bank balance sheet. But it's not just an OTC firm. If you look, about 80 of their 350 employees have backgrounds from Citadel or other quant trading, high-frequency trading shops. So it's obviously just a large prop trading firm. And the largest amount of stuff they move over the counter is Bitcoin, of course. Their prime clears Bitcoin futures. They bought an exchange, Poloniex, the majority of which their base or reference pairs are Bitcoin. So they're making a lot of plays in this space. You hear a lot of CEOs and a lot of leaders of asset management companies, banks, etc., not telegraphing initiatives. And I think that's what's happening here. He's trying to maintain a neutral stance to keep his audience with traditionals, and also not telegraph initiatives till they're all in place and have been deployed.
Sure. And we are seeing that all across all kinds of banks and institutions, even banks where CEOs are negative towards Bitcoin, we're still seeing them start to deploy initiatives around it. So kind of interesting. One other thing that we saw this week was a return of liquidity. We've been talking about how low liquidity was in the last few sessions. Do you think that maybe we've hit a bottom in terms of liquidity measurements, or do you think we're going to see it dry up again?
I think we have hit a bottom as far as liquidity measurements. So you've saw a lot of market makers return to quoting on the book. You're seeing the book thicken up 2 or 3 times the amount of quoted volume on there. And you're seeing total volume profiles of exchanges move back to March and February levels. I think we've sort of found a bottom here. We were wondering whether the market would go down so far that it would take years to recover, or whether this is a momentary retracement. And I think it's starting to look more like, in the grand scheme of things, this was a retracement and not a retrend. So,
all right, very good. Well, thank you very much for tuning in to the Daily Crypto Trader Report. We hope that we'll see you next time.